Hi guys. Now we're on to our next bubble, which our next bubble is payroll liabilities. So I personally like talking about this part of the chapter, which is payroll liabilities, because everybody likes to understand how they get paid, right? So if you are paging through this, I have a whole little section dedicated to money. So here it is. For 2 seconds, entertain me. All right, so hopefully I don't get sued by that. But I literally like talking about this section because it is about money. And though we are talking about it from the perspective of the employer, which is the company, you'll see how I can draw, or you can draw some similarities between, how you pay your taxes, especially because, we're always around tax seasons, things like of that nature. All right, so let's talk about payroll. Payroll is the amount of money paid to employees, right? So, paychecks, bonuses, things like that, all of those are a part of payroll. And payroll is important for companies, not because of the reason you guys maybe think of, because they love their people, so forth and so on. Yes, that is all very, very true. I do say that, but payroll is important because of the tax implications of it as well, right? And so think of your own paycheck, right? If you look at your withholdings, you have, because we live in the state of California, or maybe you are hopefully within these borders, we pay state taxes, we pay federal taxes, we pay medical and social security and things of that nature, right? And so taxes and payroll is important because number one, it's their number one expense, right? Payroll and how they pay employees and what they pay and what they have to withhold from their employees is very important. So that's what we'll talk about. So anyways, your book goes into details between the difference between a salary versus wage worker or hourly worker. You guys can read through that. There are some differences, but as we go more and more in this current time, it seems to be very few, like the line is getting a little blurred because you have 1099 employees and all of that. And you'll read about that or see that a lot more, especially as you go further in your accounting classes or even just in business. So how do you usually get an increase at work? So this could come in forms of a pay, a merit increase, a performance increase, commissions, bonuses, things of that nature, COLA, right? Which is the cost of living adjustment. So I remember moving to California from Memphis, and because the cost of living in California was significantly different from living in Memphis, they gave me a cost of living adjustment. Then we introduced this whole idea of the Fair Labor and Standards Act. So we have to thank them for minimum wage or establishing a minimum wage. And then it also talks about how we pay out overtime and double time. So of course, California is a bit unique in how we pay out overtime and double time. So we do it in California on a daily basis, whereas in other parts of the United States is done on a weekly basis. So if you exceed 40 hours in 1 week, that is considered overtime. But in California, anything past 8 hours is considered overtime. Anything past 12 hours is considered double time, right? So things like that. Okay. So there's some exceptions to or exemptions to overtime and double time, and that's usually for salary folks generally. I hate making that generalization because a lot of students say, well, nurses and da da da, they all get, yes, they do. So I'm just gonna say for 90% of it, it's if you're getting paid salary, you are exempt from getting overtime and double time. All right, so with that, let's move on to what I like to look at is a paycheck stub. That's what we're looking at right now. Now I'm gonna squeeze this a little bit, but you can squeeze it on your side. And so here we have maybe an employee working for a university, and maybe they're a little more involved than you or have a lot more going on than you, but we can all recognize some similarities from what they have. And so usually when you're looking at a paycheck stub, you have the university or your employer, sorry, not your university, the employer at the very top, who is it paying out to, and all of that information regarding the employee and employee and their ID number. So all of this stuff at the top. And then this middle section is usually dedicated to some like their hourly work or their rate or their salary rate, you know, their year-to-date earnings. On your right-hand side, you have their tax allowances, which we'll talk about in a second. And then in this box, if I can squeeze it just a little bit, it looks like we're looking at the taxes. So again, in maybe the state of North Carolina, there's no state tax. So all I see is, oh, maybe there is. There is federal withholding. And so then you have all of the other stuff at the bottom, which is before tax deductions, after tax, and employee benefits, so forth. So what I really want to highlight on it for a few seconds is that their net pay or their gross pay is $1,627, but after all of the deductions, whether it's voluntary or involuntary taxes or deductions, what they come or walk away with is $1,040. Now, many of you may feel like that you maybe feel a little gypped. Let's be honest, right? So we walk away feeling like, man, I made all of this money. Where did it go? So this is kind of a display of where your money is going, right? And again, some of that is voluntary, some of it's involuntary. So what I like to say is you start off with gross pay, right? Your raw amount. And then you have deductions. Those deductions include your federal, your state, your local taxes, medical insurance, pensions, life insurance, and charitable or contributions to organizations. And so your gross pay less your deductions equal your net pay or your take-home pay. Now, if you're looking at your paycheck and you're like, man, why is they taking so much money out of my paycheck? Well, how about we talk about that for a second, right? So if you feel like they're taking a lot of money out of your paycheck, well, you have something to do with that. So employers withhold a portion of employees' earnings for payment of employees' federal income tax, right? So usually when you first start a job, you fill out a W-4, and a W-4 is required for most employers, and it's an employee withholding allowance certificate. Now, they have changed it recently, thank goodness, to make it a little bit easier to navigate through. But most of us go through and fill out this form when we first start a job. And this is telling the government, hey, based on my dependent or my withholding status, whether I'm single, if I have dependents, so forth and so on, you are telling the government how much to take out of your paycheck. Obviously, the more dependents you have, you're telling the government or the IRS, hey, take less out of my check because I have a lot more people dependent on my income than a single person, basically. So if your so if your status is single, or if you have zero dependents, then you're saying, or you're telling the government, you can take the most out of my check. There's nobody really dependent on my income, or maybe I don't have as many deductions, so therefore tax me the hardest, right? So that's kind of the idea. Of course, there's so many tax strategies. There's so many different ways you can do this. But if you would like to learn more about that, definitely spend some time with me because I love talking about this stuff, okay? So let's talk for a second about FICA. So FICA is when an employer is required to withhold FICA. And FICA is Social Security and Medicare, right? So every time you generate a paycheck, the employer, your boss, your business is required to withhold from your check not only federal income tax and state income tax, but also Social Security and Medicare, which is also known as FICA. Now, in our book, it talks about rates that is revised and subject to change by Congress. But in our textbook, we're saying that Social Security is 6% and Medicare is 1.5%. So what we're going to do now is take a break and go through an example of how FICA tax is paid. We all pay FICA taxes unless you get paid under the table, which I don't want to know anything about that. But we'll talk about how that plays out in this next example. Okay, so stick through with me and I'll be back on the next video.